I want you to be honest with yourself for a moment. Do you feel it? That tightening feeling in your chest when you look at your monthly bills? That sense of unease when you drive past a closed storefront in your town? That low-level anxiety that whispers, "Something is wrong here." You are not paranoid. You are paying attention. Millions of Americans are currently living in states that are economically terminal. They are stuck in systems that are drowning in debt. They are reliant on industries that are about to vanish. And they are governed by leaders who are ignoring the math. But here is the hard truth that nobody else will tell you. Your state government is not coming to save you. When the pension funds run dry in Illinois, they will not bail you out. They will raise your taxes. When the insurance market collapses in Florida, they will not rebuild your home. They will tell you to move. We are approaching a deadline. This is the year the fiscal cliff becomes a reality. Federal pandemic aid expires. Municipal bonds mature at crippling interest rates. And the insurance industry redraws the map of where human beings can afford to live. If you are in the wrong state when this clock strikes midnight, you could lose everything: your home equity, your job, your retirement savings. But I am not here to just scare you. I am here to give you a lifeboat. In this video, we are going to walk through the 10 states most likely to collapse in 2026. But we are doing something different today. For every single state, I am going to give you a specific, concrete survival plan. Actionable steps you can take right now, this week, to protect your family and your finances. You do not have to go down with the ship, but you do have to start building your raft. Let's get to work. Number 10. South Dakota. The asset protection trap. We start with South Dakota. People think this state is a safe haven because it has no income tax. But the foundation of South Dakota's economy is built on a very specific, very fragile industry: the trust industry. This state holds hundreds of billions of dollars for the global elite. But new federal regulations, specifically the Corporate Transparency Act, are shining a spotlight on this money. If Washington cracks down on these tax loopholes in 2025 and 2026, or if the global reputation of South Dakota banking takes a hit, that capital will flee instantly, and the local economy that depends on those high-end service jobs will crumble. So, if you live here, what is your survival plan? Survival Action 1. Diversify your banks. Do not keep all your liquid cash in small, local, regional banks that are heavily exposed to the trust industry. If that sector takes a hit, local balance sheets will bleed. Move a significant portion of your emergency fund to a large, national bank or a credit union with a diversified loan portfolio. You want your money in an institution that doesn't care if the South Dakota trust laws change. Survival Action 2. Reskilling. If you work in the financial services support sector, if you are a paralegal, an admin assistant, or in IT for these trust companies, you are in the blast zone. Start acquiring skills that allow you to work remotely for companies outside of South Dakota. Make yourself valuable to the national economy, not just the local regulatory loophole. Number 9. Nevada. The hospitality trap. Nevada is the most volatile economy in America. It relies on one thing: discretionary spending, tourism, gambling, bachelor parties. When the economy tightens in 2026, these are the first expenses that Americans cut. We are already seeing credit card delinquencies rise. That means fewer trips to Vegas. That means layoffs on the Strip. And that means a housing market crash in the suburbs. If you live in Nevada, you need a shield. Survival Action 1. The 9-month shield. Standard financial advice says you need 3 to 6 months of emergency expenses. That is not enough for Nevada. In the 2008 crash and the 2020 lockdown, Nevada unemployment durations were some of the longest in the nation. If you lose your job in a Vegas downturn, you aren't finding another one in 3 months. You need to aggressively build a cash stockpile that can cover your mortgage and food for 9 months. Cut your lifestyle to the bone now to build that wall of cash. Survival Action 2. Do not buy. If you are renting in Nevada, do not let anyone pressure you into buying a home right now. Nevada real estate is historically the first to crash and the hardest to fall. Buying at the top of this bubble, right before a recession, is financial suicide. Keep renting. Keep your flexibility. Wait for the blood in the streets before you sign a 30-year mortgage. Number 8. Mississippi. The infrastructure failure. Mississippi is facing a crisis of basic civilization. The state is dangerously dependent on federal aid to maintain its infrastructure. As Washington tightens its belt in 2026 to manage the national debt, grants for water systems, rural hospitals, and road maintenance in Mississippi will dry up. We have already seen what happened in Jackson with the water crisis. That was not an anomaly. That was a preview. If you stay in Mississippi, you need to become self-reliant. Survival Action 1. Off-grid light. Do not trust that water will come out of your tap in 2026, or that it will be safe to drink if it does. You need to invest in a serious water filtration system for your home. I am not talking about a Brita pitcher. I am talking about an under-sink reverse osmosis RO system or a whole-house filter. And you need to store potable water. Buy food-grade barrels and keep 50 gallons of water stored and treated. This is not prepping for the apocalypse. This is prepping for a Tuesday when the city pipes burst again. Survival Action 2. Air ambulance insurance. Rural hospitals in Mississippi are closing at a terrifying rate. If you have a heart attack or a stroke, the nearest ER might be 2 counties away. Consider buying an air ambulance membership like AirMed Care. For a small annual fee, if you need to be airlifted to a trauma center, you won't be hit with a $40,000 bill. It is a small price to pay for peace of mind in a healthcare desert. Number 7. Alaska. The supply shock. Alaska is at the end of the world's longest supply chain. It imports almost everything. In 2026, if oil prices fluctuate downward, the state's revenue and your PFD check could vanish. But the bigger risk is inflation. As global shipping costs rise, the price of food and fuel in Alaska will spike faster than anywhere else. Survival Action 1. The deep pantry. Your savings account is losing value to inflation. A bag of rice in your pantry does not lose value. Adopt a deep pantry strategy. Buy bulk quantities of shelf-stable foods that your family actually eats. Rice, beans, canned meats, flour, sugar. Aim for a 3 to 6 month supply. Buy it now, at 2024 prices. When prices jump 20% or 30% in 2026, you will be eating at a discount. This is the best investment return you can get, tax-free. Survival Action 2. Insulation audit. Energy costs in Alaska are lethal. Spend money now to upgrade the insulation in your home. Seal the windows, wrap the pipes. Every dollar you spend on efficiency today will save you $10 in heating oil when the crisis hits. Number 6. New Mexico. The federal shutdown. New Mexico is a company town, and the company is Uncle Sam. The economy is almost entirely dependent on federal defense spending and national labs. If we hit a debt ceiling crisis in 2026, or a government shutdown, or simply a sequestration of the defense budget, New Mexico's cash flow stops. Survival Action 1. Contractor contingency. If you work for a federal contractor or a lab, do not assume your job is safe. You need to diversify your client base immediately. Start a side business or consult for private sector companies outside of the defense industry. You need a stream of income that does not come from a government paycheck. Survival Action 2. Liquidate non-essentials. Cash is king in a liquidity crisis. If you have a second car you don't drive, or an RV sitting in the driveway, sell it. Sell it now while there are still buyers. Get that cash into a high-yield savings account. You want to be light and agile when the federal budget cuts hit. I want to pause here for a second. This is a lot of heavy information, but I want you to confront a specific reality. Ask yourself this question: if you lost your job tomorrow, and the state services stopped working, how long could you realistically stay in your current home? 1 month? 3 months? Or would you have to leave immediately? There is no shame in the answer, but you need to know the number. Put that number in the comments below. Let's be accountable to each other. Now, let's get into the top 5. Number 5. West Virginia. The medical void. West Virginia is facing a demographic collapse. Young people are leaving, and the population is aging rapidly. This destroys the tax base needed to support healthcare. We are seeing a medical void open up across the state. Specialists are leaving, hospitals are downgrading services. If you decide to stay in West Virginia, your health is your biggest liability. Survival Action 1. Healthcare Mapping. Do not wait for an emergency to find a doctor. Do the research tonight. Identify the best hospitals and specialists in the neighboring states, Pennsylvania, Virginia, or Ohio. Map out the drive. Know exactly where you will go if you need complex care, like cancer treatment or major surgery. Do not rely on the local system to save you. Survival Action 2. The Youth Exit. This is tough love for anyone under 30 watching this. If you are young and ambitious, the best survival action you can take is to leave. Go to a state with a growing workforce and a diverse economy. Build your career there. You can always come back to visit the mountains, but don't mortgage your future to a dying economy. Number 4. Illinois. The tax vampire. Illinois is in a debt spiral. The pension debt is so massive that the state views you, the taxpayer, as nothing more than an ATM machine. Property taxes in Illinois are already the second highest in the nation. In 2026, as pension funds run low, those taxes are going to go up again and again. It destroys the value of homeownership. Survival Action 1. The renter's advantage. This goes against the American dream, but hear me out. If you live in Illinois, the smartest financial move might be to sell your house. Take your equity out. Put that cash into safe, interest-bearing investments like treasuries or CDs, and then rent a home. Why? Because when property taxes skyrocket, that is the landlord's problem, not yours. When the home value drops because nobody wants to pay the taxes, that is the landlord's loss, not yours. In a falling market with rising taxes, renting is a defensive position. Survival Action 2. Appeal your taxes. If you must own a home, you need to fight every single year. Hire a tax appeal attorney. Challenge the assessed value of your home. Most people just pay the bill. Don't be most people. Claw back every dollar you can. Number 3. Hawaii. The price cage. Hawaii is a trap. It is a beautiful trap, but a trap nonetheless. The cost of living is suffocating, and if the global economy stumbles in 2026, tourism, the island's lifeblood, will halt. This leads to a situation where you are stuck on an expensive rock with no income. Survival Action 1. The Golden Ticket Fund. This is non-negotiable for island residents. You need a specific cash fund stored safely, maybe physically, in a fireproof safe. Amount: $5,000 minimum. This money has one purpose and one purpose only. One-way tickets to the mainland for your entire family, plus shipping a few boxes. If the economy collapses and you lose your job, you cannot afford to be stranded in Hawaii, burning through your savings on $10 milk. You need the ability to eject immediately. That cash is your golden ticket. Survival Action 2. Community gardens. Hawaii imports 90% of its food. That is a single point of failure. Start growing food now. If you don't have a yard, join a community garden. Support local food hubs. Build a network of neighbors who trade produce. In a supply chain crisis, this isn't just a hobby, it is food security. Number 2. Louisiana. The uninsurable nightmare. Louisiana is facing a dual crisis. The land is sinking, and the insurance market has already sunk. Carriers are leaving, rates are tripling. Your home is likely your biggest asset, but without insurance, its value can drop to near zero because no one can get a mortgage to buy it from you. Survival Action 1. Sell high, rent safe. Look at your home equity right now. If you have significant equity and you are in a flood-prone area or an area where insurers are fleeing, consider selling now. Find a cash buyer or someone who can still get coverage. Take your chips off the table. Then move to the North Shore or areas with higher elevation and better flood maps. Or better yet, rent. Let a corporate landlord take the risk of the next hurricane. Survival Action 2. Citizens Insurance Check. If you stay and private insurers drop you, do not go without insurance. Self-insure. That is a recipe for total ruin. Get onto the state-run plan, Louisiana Citizens Property Insurance, immediately. Yes, it is expensive, but it is better than losing 100% of your net worth in one storm. Number 1. Florida. The condo cliff. And finally, Florida. The destination for millions of retirees. But now, the site of a brewing financial catastrophe, specifically the condo market. New laws passed after the Surfside collapse require condos to have fully funded reserves by 2025 to 2026. This means condo associations are hitting owners with special assessments of $50,000, $80,000, or even $100,000. Or they are raising monthly HOA fees from $500 to $1,500. If you are on a fixed income, this is bankruptcy. Survival action. 1. The CSRS check. If you own a condo in Florida or are thinking of buying one, stop everything and demand to see the CSRS. That stands for Structural Integrity Reserve Study. This document tells you exactly how much money the building needs versus how much it has. If the building is underfunded, a massive bill is coming. If you see a gap, you need to sell immediately. Price it aggressively. Get out before the assessment letter arrives in your mailbox. Once that assessment is official, your unit becomes unsellable. Survival action 2. Review deductibles. For homeowners dealing with skyrocketing insurance premiums, call your agent today. Ask to raise your deductible to the absolute maximum your mortgage lender allows. Maybe that is $10,000 or 5% of the home value. Yes, it means you pay more if a storm hits, but it could save you $3,000 or $4,000 a year in premiums right now. That is cash flow you need to survive the daily inflation. Take the risk on the catastrophe to survive the monthly bill. I want to leave you with a final thought. We often talk about the American dream as owning a home and staying in one place forever. But in 2026, that dream might be a trap. Wealth is not just about how much money you have. Wealth is about mobility, the ability to move your life, your skills, and your capital to where they are treated best. If you are living in a state that is taxing you to death, failing to protect your property, and crumbling under your feet, leaving is not quitting. Leaving is a strategic business decision. It is strategic relocation. You are the CEO of your own household. Sometimes, the CEO has to close a failing branch to save the company. So, I have a question for you. Are you willing to make the hard call? If the math says, go, do you have the courage to pack the truck? Comment yes below if you are ready to do whatever it takes to protect your family's future. And if you do decide to leave, you need a destination. You don't want to jump out of the frying pan and into the fire. You need a state with low debt, strong jobs, and a government that stays out of your way. I have analyzed the entire map and found the top contenders. This video right here breaks down the 5 best states for jobs and affordability in 2026. Click here to watch it and start planning your escape route. I'll see you there.